The Japanese yen sits at 158 yen per US dollar right now, meaning that I could be a millionaire in Japan with just 6,000 bucks. But why is the Japanese currency depreciating so fast? And why the f should we care about such a tiny country? To start off, in the 1980s, the US dollar was way too strong compared to the Japanese yen, which made Japanese products like electronics and cars way too cheap for Americans to buy, making the competition unfair for American companies. So in 1985, President Ronald Reagan cornered Japan in the Plaza Hotel in New York and forced them into signing a deal called the Plaza Accord. That strengthened Japanese yen against the US dollar. A direct consequence of that was Japanese products became more expensive for Americans to buy and harder for the Japanese companies to sell, meaning that the businesses in Japan started to struggle as they cannot export cheaper products anymore. So the Japanese government stepped up, and as you may have guessed, they lowered the interest rates. That singular decision would soon cost the Japanese everything. Because when businesses can borrow for cheap, it floods the market with cheap, easy money to offset the loss in foreign exports. Soon, the Japanese stock market and the real estate was in an extreme, unsustainable bubble. And within a year, the Japanese government raised the rates. The bubble popped in 1989, and the entire stock market crashed with it. People could not pay their debt, and businesses started going bankrupt. The Japanese government once again went in panic mode and started slashing rates. By 1995, the rates were under 1%, and by 1999, Japan became the first country to have zero interest rate policy. And for the past 30 years, they have been stuck at near 1%. And the main reason being that when prices slash, yes, it is awesome for consumers, but it is horrible for a country, because businesses stop increasing wages and people stop waiting for sales, and the government is forced to keep the rates very low, practically begging businesses and consumers to take debt to stimulate the economy. Now, if you live in America and hold US dollars, this is the perfect setup for you to get rich quick. If an American investor borrows $10 million from the Japanese bank at 1% and sells yen to buy dollars and invests those $10 million in the stock market and the bond market, he's literally earning 3% or $300,000 per year without doing anything. And since foreign investors are exploiting Japan for having such a low rate of borrowing, why doesn't Japan make borrowing harder? Why don't they raise the rates? Well, to answer that in one word, debt. Japanese government owes its citizen around $9 trillion in debt, which is more than double of their economy. Traditionally, Japanese people are savers, meaning that they keep their money in savings account, CDs, and other bank accounts. And Japanese banks invest that money in safe Japanese treasuries, which is the perfect recipe for a high debt. And for a long time, Japanese people are used to such low rates, and if the Japanese government were to raise rates, the citizens would default on their loans and businesses would start shutting down. But the final nail in the coffin came on February 28th, 2026.
A short time ago, the United States military began major combat operations in Iran.
With the onset of Iran war, the prices of oil shot up and it has been soaring close to $100 per barrel for a while. And for countries like Japan that depend on imported oil for most of their operations, they were forced to sell their US-backed treasuries, as oil is primarily traded in US dollars, meaning that the yen prices plummeted even more. Their prices have crashed below their lowest level in over 40 years. But the real question is, why should we living in America really care about the Japs? Well, our economies are way too entangled than it seems. Japan is the largest owner of US treasuries on the planet. And if Japan were to sell off over $1 trillion of treasuries, that would make your mortgage, your car payments, and everything you buy instantly more expensive. Also, remember the investors who were borrowing trillions of yen to invest in the US stock market and the bond market? Well, if Japan raised rates to save yen from crashing, those investors would be forced to sell their stock and treasury holdings to pay Japan back, thus crashing the US stock market. And for the first time, the US government is artificially helping the Japanese by buying billions of Japanese yen, hence creating an artificial demand. But Japan is not the only country struggling in Asia right now. Recently, Korea experienced a crash similar to '08, and there is a strong argument on why we could be next very soon. Stay tuned to find out.